Hey, this is Derek. Yeah, I want to take a look at UVXY. It's Saturday, July 11th. I just want to make a quick video. It's kind of a repair strategy in a way for anybody who is trading some of these ETFs for volatility. So here's SPY, SP 500 for the last 5 trading days. This is what happened on Friday. Thursday we had this big down day, and then Friday, we got this, sort of pop overnight, and then we started to sell off again. And here's UVXY, the Pro Shares Ultra VIX short-term futures. I got faked out somewhere in here. 46.12. Let me put that on the chart. Yeah, close enough. 46.12. Alright, it's gonna bother me. I'll change it. So I got in here 46.12, and I didn't have a stop, and I was playing it for a scalp. Actually, usually when I trade these things, UVXY, VXX, VX, or even the VIX, or the //VX future, what I usually like to do is just scalp intraday. So this is Friday. Over here on Wednesday, at some point I think I grabbed it mid-afternoon, and I caught part of this move up, and then I dumped it. I didn't hold it overnight, which is good. You see what happens. This is nice. We go up, pull down, and then we spike overnight, but and obviously anyone who bought this on the low was happy when they woke up the next morning. But this can happen pretty often as well, where you go to bed thinking it's fine, and then you wake up and it's gone. That's the other reason I want to do this quick video too, because a lot of people are making money in here hedging these, even though it's basically volatility ETF. They're hedging it with derivatives. Throw options on here at the end of the day. Lock in some of the fat options, the fat rich options. Wake up the next morning, you're down here. Buy back the options and then ride it back up again. Obviously, if you did that, you could make money on this sort of washout and then get right back up to the same level and then still trade out, even if you bought it here. Obviously, if you bought it any other point during the day, if you bought it here and you got all the way up to here and you thought we're going back to 49 and you're waiting for a couple points higher, then doing this selling calls overnight is a good way to kind of hedge the position a little bit and see what you can grab. So that's what I was thinking. I got in at 46.12. I was thinking, okay, we're doing this gap fill again. We got to get back up to yet Thursday's close, and that maybe if nothing else, we can get to sort of like mid 48, $4,600 for 100 shares. I bought 200 shares. Not a huge position, but I held it, and I didn't hedge it because at some point I walked away. I had some stuff I needed to do. I didn't have it. I was monitoring it on my cell phone, but I didn't have a stop. I rode it all the way down to here, and I was okay. And I saw this little bounce, and I thought, okay, well, maybe we're going to be all right. I was fine to sort of end the day a little underwater. I didn't expect that we would get all the way down here, and that's why I'm calling this a repair strategy, because I went into the weekend showing a over $900 loss on this position. So let me back this out to a 4-hour chart. So this is what I'm looking at. If we zip this all the way back to April, you can see down here there's a spike in volume. I got my stochastics still on down here at the bottom, and you can see the spike in volume. We haven't actually been, back at this level for a while. So I'm kind of confident that, even if it's an intraday spike, I mean, just looking at either these candle wicks or some of these pop-ups, here's my entry. This is 4-hour time frame. Let's go to daily for a second because that makes more sense. So here's the daily chart, right? 1, 2, 3, 4, 5 of the last 1, 2, 3, 4, 5, 6, 7, 8, 9. So, more than half of the last 9 days, we've gotten up above that. It sort of poked its head up above that entry, which means, nothing else. If, assuming everything else stays the same, I should be able to get out at least even, if not flat a little bit. If not, just below flat. If not even, then maybe like pretty close to flat. So let's go back to the 15-minute chart for a second. So what I find interesting is obviously, because it's volatility and because the market ran up almost, the S&P was up 1.43% by the end of the day, at least the ES, which is what I normally watch. Yeah, 1.43. We spiked up, we started to pull down. This is that spot where I got in on UVXY, and then we basically kind of drifted higher, grinded higher all day. Whether or not this is short covering, again, that's the other reason why I didn't put a stop. I thought because we had such a volatile week, I really had a hard time believing that so many people would be willing to, go long for the weekend. I really thought that this action that we had on Thursday would kind of repeat itself a little bit. That maybe we would find that some people weren't all that interested in holding it over the weekend. So, and if they weren't going to hold the market and weren't going to hold those levels, that the volatility would spike back up again, and and we'd be able to get out. So, like I said, I scalped this one. I scalped the VXX, which down 7% on the day. Also trade /VX. The future. This one's scary and amazing at the same time, and then obviously options on VIX when I can. Alright, so I just want to show you one other thing I was looking at. I'm going to try to keep this relatively short. So here are the options on UVXY. Sorry, and I should have grabbed some of this before the market closed to show you what was happening intraday, but it doesn't really matter. And again, maybe it does matter because these options won't all be in play Monday because everything changes based on losing the adding the time decay of the weekend, so sort of losing those extra calendar days. So like I said, I'm down $900. Repair strategy, I got in at 46.12. If I wanted to sell just before the market closed, if I wanted to sell, July 46 calls, so $12 on each, $25 underwater, by selling, basically in the money. These are paying over $500, between $5 and $6 with this bid. And even if we didn't get back up to that level, talking about taking a pretty sizable bite out of my $962 paper loss right now, unrealized loss. If it seems like volatility is going to hover in the low 40s for a minute, I could also, right here gets me out to 40 at 46.12 cost basis. 43 plus 340 is 46.40. Sell one or two of those. That's 340, 680. 680 is 2/3 of my cost basis, and if I get taken out, even though I'm getting taken out underwater, with the extra premium, I'm like just above flat. I actually just make a small gain. So because these are so rich, so unbelievably rich, that's one of the reasons why I wasn't really that worried about holding. Yeah, I can't imagine we sit still. I mean, the stuff I've been thinking about between, Greece and China, and what's the Fed going to do, and signaling interest rates, and Puerto Rico, and the news that I'm not thinking perma bear. I'm not one of these perma bears looking for a million reasons why the market's always going to go down, but I think the fact that the market's been a little choppy lately is that there's just sort of a growing list of concerns why we could pull back. Not to mention we've been grinding higher artificially for such a long time on basically Fed fumes. So let's take a look. Here's 2 weeks out. Same thing. I'll go to the cost basis, 46.12. Here's $800 right here. At 46 plus, minus $25 because I'm selling, 12 cents under the what I paid for it. I paid 46.12. That's 46. Two of those contracts, basically that's like selling at $50. I mean, at 50. Yeah, at 50. If I pull this in a little bit, you notice that there's not a huge range in here, because this is, look how tight these probability in the monies are. And again, if you don't use Thinkorswim from TD Ameritrade, this is the platform I recommend to everybody. You learn this stuff as you need it, and it's pretty powerful. But look at this, 45. I could sell a 45 call, 420. So essentially, 49.20 puts me like a $3 win on 200 shares. And then if it doesn't work out in those 2 weeks, that 420, 840 expires worthless, and that takes a big chunk out of my 962. Again, if we stay here. If we keep slipping and falling back or whatever, then I got to do this again to kind of fight the cost basis. But that's a 2 week recovery window. These get really volatile as you go further out, because it's like the next let's look at August expiration. You know, the next several weeks or whatever could be a game changer for the market if it's pretty clear that, you know, we're below the 200 moving average and we're going down. So here's, you know, 46 my cost basis for August, 41 days out. Even a net change, 5, unbelievable. 46 cost basis, you know, basically I wouldn't get exercised until I'm selling. I would be, you know, I'm assuming everyone understands options, but if you don't, I guess I should say, you know, it's like I'm selling, I bought it at 46.12, I would be selling a 46 call, and if it was at 46 or above 41 days from now, August expiration, then the buyer would have the right to exercise at 46, and then I would keep this premium. This premium is, for my 200 shares, would be $1,400. If I do not, that's actually quite a buffer. You know, obviously the risk is, then the risk just becomes opportunity cost, because I don't really want to hold UVXY. I don't really want to hold this position for 41 days. But you see my point. Even down here, if it seems like it's going to evaporate 40 plus 870, this is essentially giving it away at 48.70, and then you're pretty much obligated. You pretty much that's even in the money here. So if you really think it's going down, keep it. It's free money, and then you know, improve the cost basis like crazy. But what I'm going to do is I'm going to see what happens Monday. I'm hoping Sunday night, you know, the futures sort of slip a little bit, pull back, see where I'm at. I'll see what the futures look like Sunday night, 6 o'clock, tomorrow at 6, and then what I might do is, instead of trying to scalp it out Monday, I might just obligate it for the week, sell the weekly, you know, with for Friday the 17th, sell this one, and see what happens with this net change. See if we actually get a few more dollars here. I mean, this is assuming I get out and keep, you know, maybe somewhere in here, you know, $500 to $600 profit, you know, for basically a week. If that works, great. If it pops and this is more money, you know, even better. If it slips, then I need a new strategy. You know, haven't even gotten into this side where, you know, if I wanna, you know, reduce my cost basis, I might actually be able to add another 100 or 200 shares of this by selling one of these in the money puts. You know, here it's 41. You sell a 41 put. The bid is 385. So I mean, that basically 38, 37, 38 cost basis. Average that in with the ones that I have, and then, you know, and then sort of split the difference going forward. So anyways, hopefully that's useful. I don't know how many people got pinned in UVXY over the weekend, but yeah, that's a little bit of my repair strategy. All right, have a great weekend. See you.